Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite medical instruments and supply stocks. What is medical instruments and supplies? So these medical instruments are really non-electronic medical, surgical, dental and veterinary instruments. Think about things like syringes, apparatus, transfusion equipment, catheters, etc. There is a difference between medical instruments that we are talking about here, which is non-electronic, and medical devices. So I will cover medical devices in a later segment. Today, let's focus on medical instruments and supplies. So with that, worldwide supplies market is about $80 billion in 2019, and it's going to grow to 90. It's going to grow by 13.5% CAGR. So it's a good growth story. And you can see some of these instruments here. There's a syringe, there is a monitoring equipment here from Massimo, and you got equipment here to check your brain tumor as an example. So with that, let's go into some of the companies, my favorite companies. So if you see here, we have a list of 28 companies here. The ones in the bold are my favorites. First is Retractable Technologies, STAAR Surgical, BioLife Solutions, Repligen, NovoCure, iRhythm, OraSure, InfuSystem, West Pharmaceutical, LeMaitre, Vascular, Glaukos, Hologic, Massimo, Luminex, and Cantel Medical Group. So with that, let's next look at why I chose these companies in bold and why not others. Let's look at a list of these companies and some numbers. So with that, let's look, the way we selected these companies is really, um, first of all these companies are highly performing companies. These are ranked by performance. The top one is performing the highest in last 1 year. And then we got things like the revenue growth and the gross margin and the debt level as an example. So the ones in the bold are really there is a very good 1 year performance, and there is a double digit revenue growth. In this case, it's a triple digit revenue growth. And also we got a good gross margin. So that's the criteria. You got to make sure there is a good performance, there is a good revenue growth, and there is a good gross margin. This is a recipe for future performance. So that's why I selected those, bolded the ones which are really doing well in terms of performance, revenue growth, and efficiency or gross margin as example. So with that, retractable technologies very solid, 132% growth, debt level is low, and good gross margin. And next is STAAR Surgical, similar thought process here, good performance, nice revenue growth, and nice gross margin. So you can look through these companies. These are my favorites in the bold, and the strategy is same: high performance, high revenue growth, more than double digit, and good gross margin. So with that, let's highlight on few companies here and see why they make sense. With that, let's go to next slide here. So first is Retractable Technologies, RVP, the ticker. It's about $545 million company. It's smaller company as you can see here, and stock price is about 16.14, and 26% approved founder and CEO. And if you look at the stocks, these guys are really, when you use syringes, you got to be very careful. You want to make sure people don't reuse them. So this company basically develops these syringes and make sure these syringes cannot be used again. And even when you're using it, you can't get into accidents. So they make these syringes very easy to use, and also make sure they cannot be reused. So with that, if you look at the stock chart here, solid stock chart. Initially, they were not, they were in a flat line, but now they're doing really well. And stock price is $16.14. So it's the low stock price, has a lot of room to grow, and they got a good amount of cash and low debt. And from a market cap perspective, you can see the progression here. Over the quarters, they've been, consistently improving their market cap. That shows they're really, grabbing the market share and improving. Right now, they're about $545 million company. I can see them, clearly growing to $1 million or so in a year's time. From a revenue perspective, they've been, consistent from a revenue perspective. Now they're $13 million and a good revenue growth year over year, as you can see here. And they've been, consistent on the EPS and revenue. And gross margin is solid. Over the quarters, they've been doing well. And this company is making money. There is a net margin here, which is positive. So with that overall, this is a good trend with the medical professionals are very careful on how they use the syringes, and patients are very careful, to make sure the reuse of the syringes are really not applicable or should not be reused. So with that, this company is really monumental with this new trends around no reuse type use case. So I would recommend this company. A small company has humongous room to grow. Next is STAAR Surgical, ticker symbol STAA, about $5.29 billion company. And these guys are into sale of implantable lenses for the eye and delivery of systems used to deliver lenses into the eye. So as you can see, this is one of the important area. It's about the eye and the vision, and these guys have got a really solid, solid use case here around implantable lenses. With that, it's about $5.29 billion company, not huge. They got a lot of room to grow, and 68% approve the CEO here, Karen Mason, and stock price is around 113.53. And as you look at the stock chart here, this is really steady Eddy type stock, had been doing nicely. As you can see here, higher highs and really doing very nicely. And from a market cap perspective, they're doing pretty steady Eddy. As you can see here, didn't do too much in these 2 quarters. Then they did very well. Now they are about $5.29 billion company, very steady Eddy type company. And from a revenue perspective, they've been, improving the revenue of late, which is a good sign. And there is a good year-over-year revenue growth in the last quarter, and previous quarters in 331 and 1231. And they've been surprising the Wall Street with the revenue. And they also missed once, as you can see here, or missed twice over here too. And EPS perspective also, they've been doing pretty okay, and solid gross margin, as you can see here, and they're also making money. They've got a net margin. So with this picture here, I would recommend STAAR Surgical, especially because it's in a nice market around the vision and eye care, and really compelling stock price and the revenue growth. Next is BioLife Solutions, BLFS. And this company is into, they make sure the tissues and organs, they can be, used, during a freezer. Even when you freeze them, they don't get the freeze burn, so they can be used for a longer amount of time. So with this, 100% approve the CEO here, Mike Rice, and they're a smaller company, $1.31 billion company, and stock price is about $39, which is good amount for it's a medium low range, I would think. And nice stock chart, as you can see here, and they have good amount of cash and low debt. And if you look at the market cap, they've been consistently growing the market cap over the quarters, and revenue is also really increasing, as you can see here. And year over year revenue growth is pretty nice in last 4 quarters here. And they've been surprising on the revenue side, on the positive surprise. And EPS, I think last 2 quarters they did not have a positive surprise, but revenue wise there is a positive surprise. They have nice gross margin, and they're still not making money. They're still negative net margin. But overall, a nice company. These initial startups, they have to spend a lot of money into their own products and R&D. That's why there is a negative gross margin. With that, I feel comfortable with this stock also for going forward. Let's look at next three set of companies here. Next is Repligen RGEN. It's about $11.80 billion company, and stock price is about $215. And these guys are into bioprocessing, and they are really into making the drugs that improve human health worldwide. And 54% approve the CEO here, Tony Hunt, and they got a good amount of cash here, $553 million, and debt is 271.78, which is manageable. And stock price is really nice, as you can see here, making its way higher highs, very nice. And if you look at their market cap over the period, it's consistently has grown up 4, 5, 6.49, 7.7. Now it's $11 billion. Very consistent market cap growth and revenue growth. And if you look at the revenue surprise, they've been surprising on the revenue side for last 4 quarters. And EPS, they've been surprising positively last 3 quarters. Very nice gross margin here, 57, 56, and very nice net margin. So this company is really making money. So with that, this is a real keeper. Stock is doing very well, and they've been grabbing the market share. Consistent revenue growth. I would recommend this stock for your portfolio. Next is NovoCure. So it's about $17.62 billion company. These guys are into tumor treating with the electrical fields. So this company is really making its strides. Very nice company. They're into tumor care, and when there is a lower chance of succeeding or survival, that's when this company's applications will really come in handy. 92% approve the co-founder and CEO here, Asaf Danziger, and stock price is about $173. And they got good amount of cash, as you can see here, and low debt. And from a stock chart perspective, very nice stock chart. They've been steadily going up for the most part. And if you look at the market cap, it's 8, 6, 5, 11. It's got its bumps along the way, but overall, over the long haul, company is doing really well. And from a revenue perspective, they've been growing the revenue consistently, and revenue growth year over the year is really nice in the 38, 33, 44 range, which is really good year over year growth. And they've been surprising Wall Street with their revenue surprise, positive surprise, and the EPS also positive surprise. Very nice gross margin, as you can see here, 78, 75, 75. And they do make money. They got a positive net margin, which is a good sign. So overall, NovoCure is a good company. And even with this whole cancer oncology, these guys are into a really nice area where they can help the humanity. Next company is iRhythm Technologies, IRTC. It's about $4.42 billion company. This is into digital healthcare and redefining the way around cardiac arrhythmias. And these guys are really cloud-based analytics type company with machine learning. And 92% approve the CEO here, Kevin M. King, and stock price is about 153. And this stock, as you can see here, has got its moments. Sometimes it does really nicely, sometimes it comes crashing down, but overall, over the long haul, company is really doing well. So with that, from a market cap perspective, it's been consistently growing the market cap over the quarters. And from a revenue surprise perspective, they're growing the revenue consistently. Right now, they're into positive earnings with the 28% here. And EPS also, last 3 quarters, they surprised Wall Street positively. Gross margin is very nice, and they're still not making money because this is one area you got to invest money into this, cloud and machine learning capabilities. And this will eventually become a cloud and a SaaS software as a service type play. So with that, I would buy this stock when the stock is down. It's got its moments. Some days it'll come crashing down. Maybe after the quarterly earnings it'll come down. That's when you buy the stock. Can be a good trading stock because it has its ups and downs. Let's look at next three companies here. Next is Hologic, HOLX, about $19.36 billion company. And these guys are into supply of diagnostic product, medical imaging, surgical product, and mainly around healthcare of women. And 85% approved the STO here, Steve Macmillan, and they're about $75.15 from a stock price perspective. Good amount of cash, and they do have good amount of debt, which is they're investing in their own capabilities. So with that very nice stock chart, as you can see here, they got one dip back in sometimes in March April time frame, but overall nice stock chart. And they had a recent earnings, and stock came down after the earnings. Good time to pick some up. So overall nice company. And from a market cap perspective, as you can see here, they've been consistently improving their market cap. That tells me they're grabbing the market share and really strong in this economy. And from a revenue perspective, they've been consistently improving their revenue, 55%, 89%, very nice revenue growth. And they've been surprising Wall Street with the positive revenue surprise and positive EPS surprise. Very nice gross margin, 73.33, and it's positive all along. And very nice net margin. So with that, Hologic is a very good company, and even if you want to invest now, they're in a little bit dip after the earnings. I would pick something up, and it's the one for long term. Next is Massimo Technologies, MASI, about $13.83 billion company. They are into improving patient outcomes around non-invasive monitoring solutions, especially in this type of scenario where we have COVID and some of these infectious disease. Especially doctors and nurses, the frontline workers. This company will provide them the ability to monitor the patients remotely. Maybe you don't need to be in the room with the patient to monitor their levels, and you can monitor them maybe across the hallway. So with that, 93% approve the founder and CEO here, Joe Kiani, and stock price is around 251 or so. So with that, as you can see, a very nice stock chart here. They've been consistently going up. And from a market cap perspective, nicely increasing the market cap over the quarters from 9.58, 12.53 all the way to $13 billion right now. So revenue perspective, same story here. Revenue increases quarter by quarter with a little bit bump here in 1231. Positive revenue surprises all along the way. Year over year revenue growth is positive. EPS is also positive. They are surprising Wall Street with a positive EPS surprise. Nice gross margin, 63, 64, 67, 68, which is very nice. And they are making money. There's a net margin also, which is positive. With that, Massimo is a company, really nice company. You should probably add it to your portfolio if you don't have it already. This is the one for long term. Next is West Pharma, WST, about $20.62 billion company, and stock price is around 278. So this company is into innovative, high quality injectable solutions and services. And this is really doing really well, and it's a trusted partner for drug developers. They got around $1.59 billion cash, as you can see, very good cash and no debt. So with that, if you look at the stock chart, very nice stock chart, doing really nicely. And from a market cap perspective, they've been improving the market cap all along very nicely. And now they're at 20.62. maybe a little bit stagnant in the last 2 quarters or so, but nice stock chart. And from a revenue perspective, they've been improving the revenue consistently, and there is a positive revenue growth quarter over quarter, year over year, and they've been surprising Wall Street with the positive surprise on the revenue side and positive surprise on the EPS side also. Very nice gross margin, about 30, 35, 37. Not as good as Massimo or Hologic, but still, nice gross margin and a good net margin. With that, I would recommend, Pharma, West Pharma for your portfolio. It's a good stock to take it forward. So with that, now let's look at monthly performance of some of these stocks and see if it makes sense for your portfolio. Um, this is the entire list of charts and stocks. The ones which are in um, uh, green background are my favorites. And as you can see, a retractable technologies stock price is around $16, and stock is doing very nicely. As you can see, it has some down months. March, August is a big one. Whenever they came down, they always bounced back. As you can see here, 40% dip here, they're back here, November, like 57% improvement already. So nice company. I would, given the stock price is small, market cap is low, I would buy this and keep it for long term. And Pulse is an interesting play. Even though I did not highlight this, this is a good stock. They don't have any revenue itself because they're still into the product development, and they're also working with the government also. And I think this is a good company. This can really produce some nice benefit for the humanity. They're in the early stage. They have their ups and downs, as you can see, but they got good amount of money, and they're doing research and development and producing some products. STAAR Surgical, as you can see, at $101 stock price, and there's some hiccups, but they always bounced back. So you get the story here. So the reason I chose this stock is really whenever they had some bad bumps, they always came back up, and they got positive revenue growth, good performance, and good gross margin. So with that, let's look at weekly, monthly, quarterly performance and see how these are stacking. Before that, let's look at a couple remaining companies here. Luminex, same story, $28 stock price, doing nicely. Some bumps, but they always recovered. And CMD, same story, doing nicely. Some bumps along the way, but they came back. Now let's look at weekly, monthly, quarterly performance. So the stocks in bold are my favorites. As you can see here, Retractable Technologies stock price is $16, low market cap, revenue growth is very nice, good gross margin, and very good revenue growth and gross margin. And if you look at the performance for the year, it's 869, year to date 56. They're in a nice range. Last week they're a little bit down, but understandable. They can go up all the time, but overall nice performance. And Pulse Bio, this is a stock that does not have products yet. They're spending money on the R&D. Overall performance is solid. Last week they came down a little bit, but overall, they're doing very well. So with that, you can take a look at this list here. The ones in bold are my favorites. And there are some other companies, here like Intuitive Surgical, which is a very good brand. They have all these Da Vinci systems that helps with the surgery. This is a good company. Only reason I did not highlight is off late the revenue growth is a little bit low, and performance is also a little bit low. As you can see here, the 1 year performance for Intuitive Surgical is around 20%, which is not bad, but not as good as other companies. And same story with ResMed. It's a very good company again, but off late performance is a little bit down, and the revenue growth is in the single digit, as you can see here. That's the reason they did not get selected, but otherwise I would like them too. So with that, I would recommend these bolded stocks to your portfolio. As usual, do your own research. In addition, happy investing. Thank you.